The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. Thanks so much for kicking off your trading day right here with me on the Morning Market Kickoff at TFNN, 9:06 a.m. We got about 24 minutes to go until the start of trading. Now, we're coming into Memorial Day weekend. Gotta love that. Okay. School. This is the lack of school for kids in Florida. I know not the case in Massachusetts, other areas of the country. This is the last week for kids, and summer's coming, man. Memorial Day, we're here, and I guess it does go to a certain area, but it's usually a little bit later, right? Memorial Day, occasionally, that's the kickoff of summer, but up in the Northeast, nonetheless, we come into Memorial Day weekend, and we got markets kicking things off. You got a downgrade, and it's like a little late to the party, right? Kind of surprising that we get this type of movement. We got markets in the red, and there's a lot going on, but S&P's giving it right now, trading at 59.13. We'll see how the volume lines up today. We've been a little bit light on the volume on fumes. We've been talking about this volume. Where do we come up to? Right to the beginning of this sell-off period, folks. Okay, we make it to a high on Friday of 59.7750, and right like in a heartbeat, we're pulling back 59.13. NASDAQ 100, we're off by 1.5%, 21,193. The Dow right now off by 0.6%. Let's put it back to a 15-minute. Trading at 47, and the Russell off by 1.4%. Bitcoin off $1,600. How about that acceleration? Last night to 107,000. Look at it. So close. Basically testing the highs. You're talking about testing the highs on Bitcoin. Remarkable acceleration. Ethereum, not all crypto created the same. Remember that, folks. Okay, look at Ethereum. 2,400, well off of the highs. Quite an acceleration recently. Nonetheless, we jumped to crude. Negative by 39 pennies so far this morning with crude. Trading at $61.50. Now, before we get into gold, you can choose your headline, okay? Treasuries, dollar fall as Moody's sharpens the focus on debt. Now, what I'll say to that is S&P downgraded the U.S. in 2011. Fitch did so in 2023. If you haven't been paying attention, folks, we have a debt issue. Right? And then you jump over and you look at what is happening in the markets, okay? And what gets interesting is we jump over to the 10-year, and you can go to the 30-year, you can go wherever you want, okay? But we're a full point from where we were on Friday. And there's your action on Sunday night. No huge open on the futures, okay? You did have that dip lower. There's your bar at 445. Okay, that's on the S&P, on Moody's downgrade. So you have what? You have lower price, higher yield right now. And it's like, really, if this is the wake up for investors, like who's waiting for that Moody's downgrade to say, I'm not going to buy the 10-year at 110.05, I'm going to buy it at 109.23. But nonetheless, it is mattering this morning. You got the 10-year at 4.55. 4.55, the yield on the 10-year, okay? And then you take a look at the yield curve. And when you go out even further, right, the 30-year up 13 basis points, the 20-year almost that high. I just looked at the 10-year. We're up about 12 basis points, as I mentioned, to 4.55. You go shorter term, still positive. Even the 2-year. We're back about 4%. We're up 4 basis points on the 2-year. That's a decent move. You jump over to the 2-year. ZT. And yeah, lower price right now, 103.08. So we have a step back in the demand for our debt. At the same time, so that's causing higher yields. Yet we jump to the dollar. Okay. And what's going on with the dollar? The dollar is plummeting. Not usually what happens as you have yields spiking, right? If yields are spiking, you could demand that higher yield by accessing U.S. dollars. But if the whole methodology is that the U.S. has a debt problem, and boy, we have a debt problem. I think we all agree with that one, okay? But on the eve of extending those Trump tax cuts, which are going to cost $4 to $5 trillion over 10 years, the dollar's not catching a bid as we have higher yields. And the worrisome thing about this morning is we have we have equities dropping, we have the price of fixed income dropping, causing higher yields, and we have the dollar dropping. So since Friday, right, we have the ES down about 60 points, okay? That's negative action. So anybody selling the equities, stock equities, where are they putting their money? Well, they're not putting it in the U.S., folks, because they're not putting it in U.S. fixed income. They're not putting it in dollars that they would access U.S. fixed income for, okay? So when you jump around, that is what reverberated in this market when you had the real sell-off going on and the tariff fear was spreading, okay? That was the S&Ps, but the worrisome part that many have said maybe caused the administration and Trump to blink was the rapid sell-off we had going on in yields where nobody was stepping in. So we had equities plummeting, right? The 8th, the 7th, the 8th, the 9th was when he finally stepped in, okay? Folks, the 10-year traded down 4 to 5 full points, right? So what's happening again? Boy, pay attention to these markets, man, because if you see the 10-year, we're now at the critical level of where we were back on April 11th, okay? This is looking to be almost a dead cat bounce, and I hope it's not, folks. All right, but we got the 10-year right now, 4.55, can't find a bid, dollar can't find a bid, equities can't find a bid. And you better believe that eventually the debt's going to matter. Doesn't mean we're going to default, doesn't mean it's going to be the end of the world, okay? But if you're in the market, you're looking for trends, eventually the debt's going to matter. And the quickest way it can matter is yields and the dollar. And the dicey part about this is you get into a spiral here where yields are spiking, causing the interest you're paying on the debt to spike, causing debt to cascade even lower, right? It'd be like, imagine if you got a credit card bill and the credit card is earning you, you're paying 25% interest on that credit card. And what keeps happening is as the credit card bill goes up, they hike your interest rate. And when they hike your interest rate, the cost to service that debt goes up, adding to the amount of debt you have. And the credit card company says, well, sir, you had 20 grand last year. You got 35 grand this year. We're charging you a higher interest rate because how are you going to pay back this money? And then you go into the dollars. It's a dicey scenario. When you have equities trading lower, you have fixed income, the price of fixed income trading lower as yields are higher. And we have the dollar ripping lower, man. Back to the 100 price point. And with all of that taking place, okay, you go to gold. Gold should probably be up more than $50. Okay, yeah, maybe we're making a run to the upside, but I've been talking about on this program, okay, if we get a run to 90, I think you have a little consolidation area, and maybe gold just holds its own, pushes the highs at 3,500 as we have dollar weakness coming into the opening bell. Stay tuned, folks. We got a lot to talk about this morning. We're coming back. S&P is off by 70 points. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. S&P is off by 67 points coming into the opening bell. You get a downgrade from Moody's. And yeah, what is interesting, jumping back real quickly here. Did I jump around? Where'd we go? Yeah, I already lost that article. Is this the one? Nope. Okay, we'll jump around. Nonetheless, you're late to the party, right? S&P 2011, Fitch 2023, Moody's 2025. Somehow it moves the market. But nonetheless, you know, that is made on the day you get headlines like this, where the Key House Committee advances Trump agenda bill after appeasing conservatives. What's interesting here is the details are not really in there. And you have 4 members who opposed the bill Friday voting present. Seems like they're going to up the ante on when some of those scheduled cuts come in, whether you're talking about Medicaid, whether you're talking about clean energy on the other side of that. And it is a tough one, folks, when you look at those. Somehow it gets political, but it shouldn't. You know, here's what, you know, it's so wild when you look at both sides. Republicans, Democrats, right? Democrats, more notable for spending the money when it's never paid for. Okay, Republicans cut the taxes without cutting the spending. They could be cutting the spending right now. Okay, cut the spending. This is not political. There's no conservative nature going on whatsoever, as these tax cuts are going to add $5 trillion over a decade when you have news coming out like this. It makes no sense, folks. I'm all for tax cuts. Cut the spending. Do it quicker. Do whatever you got to do. You got to do both sides of it. Okay? There's no conservative nature about what is going on right now with tax cuts that aren't paid for, that are going to add $5+ trillion. Make the cuts. They're not going to make the cuts. because there's going to be pushback. There's always pushback. Both sides going to do it. It keeps going on. Nothing's changing. And eventually it's going to catch up. That's it. We're talking about $1 trillion a year. Okay. Yeah. And some of these numbers, okay, you're talking about just recently, we were spending about $225 billion on the debt service. Now we're over $1 trillion because of where interest rates are. $1 trillion a year, and we're passing tax cuts that aren't paid for that are going to add $5 trillion. I'm all for tax cuts. Bring it. But that's not fiscal conservative. That's not reasonable ways to run the deficit. In the same way that people get upset about Democrats spending money that's not paid for through through taxes, right? It's the same exact thing on the other side in terms of the fiscal irresponsibility. Period, man. It's just one priority over the next. It's whether you favor tax cuts over spending or whether you favor spending over tax cuts, but neither side cares about fiscal responsibility. Okay? You can make the case. Growth is not going to offset it. Make the cuts to the spending if you're going to do it, if you're going to claim that you're fiscally responsible. Everybody should believe in that. It's not happening at all. And it's just going to keep happening. And that's going to matter when you talk about yields and the dollar. Okay? Pay attention to what's going on today. No one's buying U.S. equities. No one's buying U.S. fixed income. No one's buying U.S. currencies today, folks. Okay? On the heels that we're getting the greatest tax cut, pro-growth tax cut ever. We'll see where that goes. All right, we jump around. Walmart shares trading a little bit lower than the market. You're down about $2 right now for Walmart. That's going to be a 2% pullback. And yeah, not surprising that they're catching a little bit of heat from Trump. Now, what's surprising here, indeed, okay, I have that one up too? Maybe I did. Is that, yeah, I do have it up here. I was talking about this on the show last week when I said, folks, Walmart CFO literally said, if you haven't seen the price hikes yet in May, they're here and they're coming. I was like, whoa. Yeah. That was Thursday morning. Right? I was like, did you heed those words? If you haven't seen the price hikes coming, they're already here and they're coming this month and you'll see them. And it took about 48 hours for the president to push back and tell them not to raise the prices. Eat the tariffs. Well, we know that's not how it's going to work. Okay, but nonetheless, Walmart, they're under a bit of pressure. We jump to yields again. Atlanta Fed Chair Raphael Bostic, yeah, he's looking for leaning toward just one rate cut this year. Well, why are they going to be cutting dramatically, okay, when the market's reacting like it is with the 10-year pushing 4.6% right now? I worry a lot about the inflation side, and mainly because we're seeing expectations move in a troublesome way that will make our job harder. They're not ignoring what Walmart is saying in the prices, okay? There are going to be impacts here, regardless of where we are. There's still a baseline tariff level that has come into this economy that's going to take an adjustment. That data is going to flow into the markets over the next few months, if not longer. And yeah, where's the Fed going to go and where are rates going to go? Well, right now, folks, rates are going up, the dollar's weakening, and we got equities pricing some of that in right now in a big way. All right. And, I was just reading about it this weekend, and Center for American Progress, total liberal think tank, okay? And so I was looking for the other side of this. I bring it up, man. We got everybody in the den, right? We got liberals, we got Democrats, we got Republicans, we got conservatives, okay? Please help me out on this one if I'm wrong, okay? Because I was trying to find out, like, man, what are all these tax cuts costing that never gets offset because you won't cut the spending, right? And so I fumble upon this, and yes, this is a think tank from liberals, okay? I get it. But tell me where the data is wrong on this, because I was like, man, and what it just points to is that there's been so many tax cuts, and continually, okay, they don't get paid for. And when you look at the number that's been added here, right, and they go into it, whether you're talking about all the way back to Bush, okay, the Bush empowered in 2001, tax cuts, yeah, that's about $8 trillion that they've cost by the end of 2023. Folks, I remember it. I was in college. I was coming out. I was just beginning my workforce. Okay? You take that tax cut out of the equation. You take the Trump tax cuts out of the equation. And what they show you here is, okay, all other debt in terms of where you are, yes, COVID, you want to make the case that we shouldn't have done that? That's a valid case. But that's a one-time exception. That's done. That's not baked into things anymore. Okay? You know what a huge part of it is? the Bush tax cuts. And then you have the Trump, and now you're going to have the Trump tax cuts again. This one's from 2023, okay? You got to make both sides of the equation. You got to. Now, they talk about in here as well, okay, that when you came out of the war, right, you had our debt levels, okay, and here it is. It's remarkable. In the 34 years after 1946, right, the federal debt declined from 106% of GDP to just 25%, despite the federal government running deficits in 26 of those years. Do you know why it did that? Because they ran a primary surplus, meaning, okay, that if you don't count the interest payments, the budget's in a surplus. We're not there right now. Okay, we're losing trillions a year, even with $1 trillion budget interest payment, okay? And we'll finish it up because someone's got to pay for it, man. All right? But we're talking equities when we get back, folks. We'll jump away. S&P's off 65. Stay tuned.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now, negative by 60 as we kick off the trading week, coming into Memorial Day weekend. And yeah, we got markets off 1% right now. You jump to the NASDAQ 100 off by 1.3. Dow right now up by, negative 0.6%. UNH helping that cause, though. UNH up by almost 4% right now. A little bit of a bounce off the lows at 248. We're at 303 right now after their problems last week. excuse me, to put it lightly. We jump over that gold contract. And yeah, a great point in the YouTube Tigers Den. All right, saying, because I had made the case, gold should be up more in terms of what is happening right now. Okay. And yes, sometimes when you get higher yields, okay, that does not necessarily translate into a higher gold, right? The same thing, you're getting higher yields. Well, that's a counter balance to gold. But guess what we have going on today? Okay, that may be the case. But when you have yield spiking, you don't usually have the dollar tanking. Okay? You don't usually have the two of them pulling back dramatically with equities. Pull that one off. So where's the money going? And again, it's not going to gold even, right? So people are pulling out money. That's how it works. You have a decrease in demand no matter what, right? If you liked bonds at 110.21, well, they're still not buying it at 109.26. Otherwise, you'd be back there, okay? So they're not stepping in to fixed income. They're not stepping into the dollar, that's for sure. You're down a full point from where you were on Friday. They're not stepping into equities, as we're off a full percentage point right now. And realistically, they're not stepping into gold either, okay? Because, yes, we're well off the lows of Friday, but that is just a consolidation area jumping around in terms of where you are in that gold contract. And you know what? It's due for a consolidation, folks. Okay, you just doubled in price over a period of two plus years. On that gold contract, you jump over to silver. Boy, different story on silver, man. Just chopping around. No strength yet for silver. And yeah, maybe you catch a bid from 32, but maybe is not a plan, folks. There is no bid. You got an acceleration off the lows, but that's it on this chart as you are capping out, as you oscillate around the $32 price point. Check back in on Walmart shares. They kick off the week down about 1.5%. We jump over to NVIDIA. So NVIDIA was all the way down to almost 130 in the pre-market, down 1.7%. We jump over to NVIDIA, and you're going to be able to use their chips without using their CPUs and GPUs. So the new NVLink Fusion program will allow customers and partners to use non-NVIDIA CPUs and GPUs in tandem with NVIDIA's products and NVLink. And that is not how it had been. Until now, NVLink was closed to chips made by NVIDIA. It's a tech developed by NVIDIA to connect and exchange data between its GPUs and CPUs. So longer term, they're probably making the play there. And they sure are, right? Yeah, so they announced that AI chip making partners already include a plethora of companies, okay? Fujitsu and QCOM will also be able to connect their own third-party CPUs with NVIDIA GPUs. While NVIDIA holds a dominant position in GPUs used for AI, many competitors see room for expansion in chips designed for more specific apps, okay? Include basically their competitors, Google, Microsoft, Amazon, all of which are buying their chips. So they're trying to make sure that they're a player as you move forward there. They consolidate NVIDIA as the center of that AI factory, even when those ecosystems aren't built entirely with NVIDIA chips, right? That's what's going on there. They know that they want to be able to service all these companies that are going to be using their own ecosystems and make sure that they can sell NVIDIA chips to those companies. But guess what? Market says, you know what? We liked it when you were just doing everything yourself for right now. Off 1.9%, pretty much in line with where the tech is on the NASDAQ 100. We jump around to some of the Magnificent Seven. Oh, watch out for Apple. What's going on here? Whew, they're selling Apple. Look at that move, man. Look at that move. Apple off 2.7% on the open. You were chopping around to 208. Look at that. Every minute we've been open for 5 straight minutes. Apple dropping like a rock. We're down by 3.2% right now. Excuse me. Look at that. All right, let's see what else is going on right now. Amazon shares, they catch a little bit of bid off their low on the open. Nah, they down by 1.4% right now for Amazon. You jump over to Google shares, down by 0.8% right now. Microsoft in the green. Ooh, look at that. Somebody selling Apple to buy some Microsoft this morning? Because look at that divergence, right? You have Microsoft drive up $5, Apple drives down. Right on the open there. You jump over to Meta shares. They catch a little bit of a bid as well. Still off by 1.4% right now. Ooh, Tesla down by 4% on the open. NVIDIA catching a little bit of a bid on the open. Jump over some other chip stocks. AMD down by 2.2% right now. Intel down by 2%. Look at that volatility, man. Let's see how the airlines are doing this morning. Delta, little volatility, down by 0.1%. Yeah, United. Let's see. Keeping our eye on JetBlue, but yeah, look at this already, right? Back below $5. Don't give yourself much room if you're trading some of these equities, would be my opinion, folks. An equity like this, you can be back to $3.34 in a heartbeat. Yeah, some of these dead dogs, they caught a bid, giving it back today with the market. Coal's down by 2.2%. Yeah, not TJX, man. This thing's... Look at this on a weekly, man. Positive on a negative market day. TJX pushing 133.46. And if you're looking at this equity, folks, approaching the upper boundary of that channel line that we have been in since 2022 on TJX. Just crushing it. Speaking of another uptrend channel, I always bring them up, Mickey D's. Look at this thing, man, right? Tell me these channels don't matter, right? On a day like today, everything's getting slammed. What's positive? TJX. McDonald's, other equities, of course, but Mickey D's, boy, this one, you got to go all the way back to 2015. Remarkable uptrend channel for McDonald's, right in the middle of that channel right now, 318.84. Mickey D's in the positive as well this morning. Disney's been on quite a run. Give back 1% with the market so far this morning. We jump around to some of the other streamers. Paramount trading lower, down by 0.4% right now. Warner Brothers, they're going back to HBO Max, down by 2.3%. Look at this thing. You know, maybe looking for that $8 area. If you look in Warner Brothers Discovery, not sure why you are. I love HBO, but I don't love this chart right now. That's for sure, man. Look at this chart, right? And remember, that $78, that was the Bill Wang saga. Remember that one. He ran that thing up, ran it down. $8.95. Markets in the red. Stay tuned, folks. We got a couple more segments. We'll talk more equities. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps negative by 44 points right now. NASDAQ 100 off by 209, but we're catching a little bit of a bid. Look at that volume come in, right? We just popped 100 points in the NASDAQ 100. And yes, folks, you talk about being late to the party. You better believe. I'm always saying myself, right? You think about the interest rate that you're accepting. You think about a period of 10, 20, 30 years. You try and go that far out. I think if you told somebody that they had to keep that debt instrument, right? Like if you bought a U.S. Treasury right now for 10 years, and this is not how markets would function, but just to give you the level of risk that you should be assessing, because you can always sell it at a loss, okay? But let's just say somebody said to you, what interest rate would you have to not have to accept? What's the lowest interest rate that you'd be willing to accept to buy U.S. government debt for a period of 10, 20, or 30 years? And it should change dramatically whether you go 10, 20, or 30 years, right? We struggle to extend the debt ceiling right now on a monthly basis. And you're telling me to assign a risk level for loaning the American government money for a period of 10 years, and I think you'll get paid back, okay, because default is unacceptable. You see the Treasury Secretary say it. I think Trump wouldn't let that happen because of the market reaction if it ever did. But what could happen is, right, what happens? What happens is you're getting an interest rate that's going to be paid back in dollars that are worth a lot less. And that is the real potential when you go out into the future, when you talk about the interest rate, when you're only talking about right now 4.5% for a 10-year period. You go out 30 years, right? And I think the level of reward that I would need, okay, you're at 5% right now in a 30-year. I'm not sure I'd give the government my money for 30 years right now. And listen, everything cascades, right? If you go buy corporate debt and the U.S. government defaults, well, you're screwed there as well, okay? So it would reverberate everywhere. You can't say, well, I'll just go buy Apple debt because I got more faith in Apple's going to pay their bills. No, because Apple's got treasuries too. So if the treasuries aren't paying, Apple's not paying, right? Everybody's not paying if the treasury doesn't pay. But you get the point. There's a low level of yield here. So yes, they're late to the party with the downgrade. I get it. Surprising you get a market reaction. But at some point, it's going to matter. Okay, the market can remain irrational much longer than you can remain solvent, or that degree, however the quote goes, okay? But you better believe that type of fiscal irresponsibility is going to come due at some point. And listen, it's not like I'm arguing that the world's going to fall apart, but you better believe it's going to matter, man. We're talking about $40 trillion approaching. And right now, I think we're at about $106,000 per person in the country, that debt. Okay? Quickest way to get out of that debt, devalue the currency. And the market's going to do it for the currency and the way it looks right now. Let's check back in on that gold. You take a look at where we are in gold. 32.36 right now. That's our daily. Let's just go back 20 days in terms of where we are. We're trading right where we were in the beginning of May. Okay. And that's right where we were in the dollar as well. So you're jumping around in terms of where we are right now, but the dollar pushing that 100 price point, gold trading at about 32.50 right now. Some of the movers this morning, UNH up by 4.2% right now. As I mentioned, Tesla down by 4% after catching quite an acceleration. I mean, look just right on this chart, from 220 to 350. Whew. All right, what else do we have? Yeah, in terms of DNA, not bad for all the data, I was thinking, right? If you got $250 million, I mean, I'm surprised that Elon wasn't in there buying everybody's DNA. And I'm not even half joking, right? You think about data rules everything. Regeneron, that's going to be like the biggest sale they ever got, man. They're not going to buy the firm. They're going to buy the data. 23andMe for $250 million. It's going to comply with the privacy policies and applicable laws to respect the use of customer data. It's all about the data, man. Yeah. The millions of customers' genetic data that could be sold to unscrupulous buyers. Unless the company has collected data from 15 million customers who order the DNA testing kits. And boy, you talk about messing up a good thing, man. Because data is everything. You got 15 million genetic makeups, and Regeneron has all that data now. Ancestry.com, right? That's the one that I did for my DNA. It's funny. My dad had already done it. And so once like your familial DNA is in the system, it's like, they got us anyway. They got the DNA, they get your dad, they get your cousins, they can track you down no matter what. You're in the system. But yeah, you always think about that, right? You give them the data. Nonetheless, $250 million. Seems pretty cheap in the context of what people pay for data these days. And of course, we could talk a little bit of debt, but we've talked plenty of debt today. We talked some interest rates, Mr. Raphael Bostic. Yeah, and then just certain equities. All right, let's jump back to yields right now. As we got markets clawing back some of the losses right now. S&P's only off by 33. Man, today would be a big day. If we finally get some strength in this market, look for it. You get a turnaround. You get some green bars, right? We got green bars because they're trading higher from the lower opening. And we have a potential for some volume today where you get a big open like that, right? We got yields moving. You got the dollar moving right now. We got the S&P's off by 33 points. Basically halve the losses. Yeah, look at that run, man. We're up by almost a good 40 points from where we're coming into the opening bell. And we've gotten back everything we had on the Sunday night futures. We're right back to where we were on that news at about 5 p.m. Eastern time. At about 4:45. That downgrade came out, and we're coming into that area. NASDAQ 100, same thing, right to where we were at the close of Friday's action. Now, the NASDAQ 100, let's talk a little price and volume. Okay, you're talking about this area? Look where we are, folks. Okay, look where we are. Be very careful. Spikes up on your back, man. We've been talking about this price area for a while. We're right back up here right now. That's where the true selling really started in this market, late February. Listen, it's not a conspiracy theorist. It just might be smart money, okay? But people were getting out of Dodge, man, okay? And yes, there was a lot of talk about it. Market was slowly cascading. We didn't get any of these huge days, but we did. You had NASDAQ 100 days. What is that? That's a 650-point day, right? On March 3rd. That's an 800-point day from 21,100 to 20,300. This is why everybody, we were talking about when articles, right? They said, the stock market's gotten back everything since Liberation Day, April 2nd. I said, no. You can't start it there. Okay, you can't start it there. You don't have to cherry pick it at the highs. Maybe you started on Election Day to really give the president a fair shake. Okay, but really, this is where it started. That's the highs. That's the selling. That's the sustained level of selling we got for 3 straight weeks. And where are we? We're literally almost to the tick. We're literally to the tick right now. The high on that day was 21,386. And as I was saying that, Okay, the high on February 27th, 21,386. As I say that, we are trading at 21,364. Stay tuned, folks. One more segment. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&Ps. Only negative by 35 points. Yet another green bar on this chart. You start lower, you trade higher. We got green right now, at least on a candle chart. NASDAQ 100. Now, we just looked at the S&P, okay? We just looked at the NASDAQ 100, right? And I'm telling you, the highs were literally almost to the tick. February 27th, sustained selling begins. That high, 21,386. We're within about 30 points from that price level, okay? S&Ps, when you look for the area, there's the 25th. Really, it's the 27th. The high from that day, 6,014. So S&P's not quite as high as the NASDAQ 100, but boy, you talk about it, right? You basically touched 6,000 on Friday, 59.7750, and we're just off that price point. But keep those areas, man. You know, we're going to need some real strength to break through this area when we had all that selling. Doesn't mean you can't do it. Doesn't mean you can't trade higher in fumes. But that's a decisive area, and we're right at the top of the range on the NASDAQ and on the S&P 500. All right, dollar saving itself a bit. We were almost touching 100. When I was getting ready this morning early, about 7 a.m., we're just off that level, still down about 750 ticks right now. And you get a slight reprieve on yields as well. Hey, that's a 7-8 point move right now. And yeah, maybe a little bit of an exacerbated move on the open. You talk about, is there any greater lagging indicator than somebody coming out and saying, hey, I think the U.S. might have a debt problem? Is somebody pricing that into the yield and the risk associated when there's no plan for any type of fiscal responsibility? Of course, it's a known issue, folks, and hopefully we get it under control. Those tax cuts ain't going to do it. They're going to give some tax cuts, but that's not going to get it done unless some spending cuts come with it to offset. Folks, thanks so much for kicking your Monday off right here. Stay tuned. We got our man Basil Chapman. He's coming up next, folks. We got Larry Pesavento coming up, and I'm actually going to be back at 3 o'clock. So I'll do the show at 3 o'clock. Tom O'Brien Show. I'll be back this afternoon. Looking forward to that, and we'll see where we are then. Stay tuned, though, folks. Basil Chapman. He's coming up live right now for the Tiger Technicians Hour. Stay tuned. We'll see you this afternoon, folks. Have a great one.